Hey everyone, and welcome. We're going to tackle a subject that, let's be honest, can feel like a giant puzzle with half the pieces missing: personal finance. But the good news? It is nowhere near as complicated as it seems. Over the next few minutes, we're going to lay out a super simple roadmap to help you finally take control of your money. So let's just dive right in. If you've ever felt totally lost in a sea of financial jargon and complicated terms, then you are definitely in the right place. It can honestly feel like you're playing a game where nobody ever taught you the rules. But I promise, we're about to change that. We're going to show you just how simple this can actually be. We're going to walk through this whole thing in 5 super clear steps. First up, we'll get the basic rules of the money game. Then, we'll look at the simple math of what's coming in versus what's going out. From there, we'll learn an easy rule for budgeting, unlock the secret to making your money grow all by itself, and then we'll wrap it all up with an action plan you can start using literally the second this is over. Okay, so first things first. To win any game, you gotta know the rules, right? So what in the world is this big, intimidating word, finance? Let's just break it down. You can forget all the complicated charts and weird terms for a second. At its heart, finance is just this: the simple art of managing your money. That's it. It's about how you earn it, how you spend it, how you save it, and, this is the exciting part, how you make it grow, so that you are in charge of your money and not the other way around. And really, everything to do with money boils down to these 5 things: earning, spending, saving, growing, and protecting. Literally every single financial decision you ever make falls into one of these buckets. If you can get a handle on these 5, you're already well on your way to mastering your financial life. All right, let's get to the most fundamental part of the entire money game, where it all begins: just understanding your cash flow. It's as simple as this: what's coming in and what's going out. So on one side, you've got your income, all the money coming in. That's your salary, maybe a side hustle, or even a little interest from a savings account. And on the other side, you've got your expenses, all the money going out for things like rent, food, bills, and yeah, all the fun stuff too. The very first step to getting in control is just knowing what's happening on these two sides of the equation. Now, here's where things get really interesting. See that order? Most of us, we cover our needs, then we spend on our wants, and then we just kind of hope there's something left to save. But people who are good with money, they flip this completely. After their needs are met, the very next thing they do is pay themselves by putting money into savings. It's a total psychological trick. You're prioritizing your future you before the you that wants to buy something right now. This simple little shift is an absolute game changer. And that idea of paying yourself first, well, that leads us directly to the single most powerful tool you have for taking control: the budget. I know, it sounds kind of boring, but trust me, a budget is what puts you in the driver's seat of your own life. And one of the simplest ways to even start is with the 50-30-20 rule. It's so easy. The goal is this: 50% of your take-home pay goes to your absolute needs, like housing and food. 30% can be for your wants, the fun stuff, and a non-negotiable 20% goes straight into savings and investments. So, just to make that real, let's say your monthly income is 50,000 rupees. If you follow this rule, that means you'd be aiming to save or invest 10,000 rupees every single month. See? It just gives you a clear, simple target to hit. No more guesswork. So, what's the number one priority for all that savings? Building your emergency fund. Think of this as your personal financial safety net. It's basically 3 to 6 months of your living expenses just sitting in an easy-to-access account. This is the money that saves you from going into debt when life happens. An unexpected car repair or a medical bill. It's pure peace of mind. Okay, so once your defense is solid, you've got that emergency fund built up, it's time to go on offense. And this is the really exciting part. This is where we learn how to make our money start working for us. And this is where the real magic happens. It's a little concept called compound interest. And all it means is you don't just earn interest on the money you save. You start earning interest on your interest. It creates this incredible snowball effect that just gets bigger and bigger over time. Okay, check this out. Let's say you invest 10,000 and get a 10% return. After year 1, you've got 11,000. Simple enough, right? But in year 2, you earn 10% on the new total, on the full 11,000. That brings you to 12,100. Then by year 3, that interest gets calculated on an even bigger number, and suddenly you're at 13,310. You see that? That accelerating growth is the true power of compounding. So what's the secret ingredient that makes compounding so incredibly powerful? It's simple. It's time. Like it says here, starting early is the most important thing you can possibly do. The more time your money has to work, the bigger and more powerful that snowball effect becomes. But, investing isn't just about getting rich. It's actually about financial survival. You have to beat this thing called inflation, which is just the fancy word for the fact that everything gets more expensive over time. If your money isn't growing faster than inflation, you are literally losing buying power every single year. Of course, when you invest, there's always this trade-off between risk and reward. This table lays it out pretty clearly. On the low risk, low return end, you've got stuff like a fixed deposit or an FD. That's where you're pretty much just lending a bank your money for a guaranteed but pretty small return. In the middle, you have things like mutual funds, where your money gets pooled with a bunch of other people's to buy lots of different stocks and bonds. That spreads out the risk. And then on the high risk, high return end, you have shares or stocks, where you're buying a tiny piece of an individual company. The potential reward is way higher, but so is the risk if that one company doesn't do so well. And one last really critical point on growing your wealth. You have to understand the difference between good debt and bad debt. Good debt is an investment. It's money you borrowed to buy something that's going to grow in value, like an education or starting a business. Bad debt, that's for stuff that loses value the second you buy it, like using a high-interest credit card for a fancy dinner. Seriously, avoiding bad debt is just as important as making good investments. Okay, all this theory is great, but action is what really matters. So let's wrap this all up with a simple step-by-step action plan you can literally start today. Here it is, your roadmap. First, if you don't have one, open a bank account. That's your home base. Second, for just 1 month, track where your money is going. This isn't about judging yourself, it's just about collecting data. Third, use that info to create your 50-30-20 budget. Fourth, start putting that 20% towards your emergency fund. And finally, once you have a little bit of a cushion, take your first step into investing, even if it's something super safe like a fixed deposit, just to get your feet wet. So there you have it. You now have the blueprint. The concepts are actually really simple, but their power to completely change your future is profound. So the only question left is, what's going to be your first financial goal? Whether it's saving for a trip, a down payment, or just getting that peace of mind from an emergency fund, it all starts with that first step. So what's yours going to be?